If you want to become a successful trader in 2026 while other beginner traders are continuously making expensive mistakes, then you're going to want to listen to everything I have to say in this video if you're a beginner, because I'm going to show you exactly how to be successful in 2026 in trading. My name is Nestor. I'm the owner of FinTrade Master Academy, where we're an academy that helps people make 20% returns per month and learn how to trade like the banks do. Now, everything I talk about in this channel and in this video is 100% authentic. There's no scripts, there's no anything. If you look at my table, I just got a monster and some paper and a microphone. That's literally all I got, right? Because this is literally 100% from my experience in the years that I've been trading, right? So I have my paper, have my Sharpie thing here. Let's dive into this and let's make you successful in 2026. But before we do, I want to let you know that trading is very risky. A lot of people lose money because they don't have these things I'm going to talk about in order, right? So meaning, be very, very cautious when you're putting money into the markets. Make sure you're following a plan, following a strategy, and you're doing proper risk management. And by no means is this financial advice. 95% of traders fail every single year. Only 5% actually make money. So hopefully you can be part of that 5% next year. So if you're a beginner, you're probably wondering, what is trading? Trading is getting in at a certain moment and point in price and then exiting in the future at a certain moment and point of price, whether it's for a gain or a loss. Now, there are 4 types of traders, right? I'm just going to put 4 traders. And if you're writing notes, it's be best to get a notebook, pause it, grab some paper, and then take some notes down. Because if you really want to be successful in 2026 with trading, you're going to want to write these things down. So first and foremost, we have investor, right? This is where people are making anywhere between 8 to 12% a year. This is called your safe investment. That's like 401ks, Roth IRAs, and things of that nature, right? The reason why investors get 8 to 12% is because they're going off of the value of appreciation, meaning they put their money in an index fund or precious metals or even a crypto, whatever it may be, and they just let it slowly grow over time. And that's considered a safe retirement plan for most people, right? That does not include inflation, but this is still a category of trading that many people do not understand. So when I say I teach people how to make 20% returns per month, it's mind-boggling to them because they're stuck in this type of category, right? And then you have the swing traders, right? What does that mean? Swing traders essentially do what it says. They go from the low to the high, or they go from the high to the low. They just swing it. They're usually holding a trade for like a week, or potentially 2, right? Now, this point, you're probably making maybe, let's say, 5 to 8% a month, because you are now doing something that's called leverage of your margin account. What does that mean? That means if you have a $100,000 account or even a $1,000 account, you can now use margin to leverage a percentage of that $1,000. So meaning you can expose 1 or 2% of that $1,000 into the market to be able to make 1, 2, 3%. But with swing traders, they're swinging it from the high to the low or the low to the high. This is good for people who are extremely busy, have high demanding jobs, and they just need to get in the market, let it do its thing, and set it and forget it, right? Investors is for more people who just don't want to trade whatsoever and they don't have any desire to learn. So of them not learning, they will be suffering with that 8 to 12% per year. Swing traders, they want to learn, but they're busy, so they're just swinging their accounts from the high to the low and low to the high, right? Then you have something that everybody wants to be, is a day trader, right? This is where you're now making, some decent money with decent percentages, right? But the issue with this is you're trading like a retail trader, right? Retail trader. What does that mean? That means you're doing concepts of basic gambling concepts, to be quite honest, right? There's really no solid strategy to be considered as a day trader. And usually these are the type of people that are just on their accounts all day long from market open to market close, and they're probably over trading, breaking the rules, et cetera, et cetera, et cetera, right? They're doing a lot of not correct things. This is what day traders are like. But if you happen to start finding a good solid strategy that's a retail based system and you follow your rules, yeah, you can start making good, money in percentages, right? That's very possible. Now, the fourth category is the category that I teach, which is institutional methods. Institution, I spelled this so wrong, but you get it, right? Institutional methods, meaning trading like the banks. Here, you can consistently make 20% returns a month, and you can consistently make some good money from doing this, right? So these are 4 types of traders. Now, you have to ask yourself, which one is going to be best for me? Again, investor, or for more people who don't want to enter the market, don't want to learn, just want to put their money in an index fund, and they like what they do for work, and et cetera, right? So this is more of a safe way of doing things, but because you are, not wanting to learn a skill, you're going to get penalized for low returns, right? Swing traders are for people who have high demanding jobs, they're looking to get out of it, but they just don't have the time to log on at market open every single day, right? And trade for 10, 15, 20, 30, or 40 minutes, right? So the caveat to this is you're going to learn how to read the markets, but you're going to probably hold a trade for a week and then maybe make 5-8% a month, right? So you're making a little bit better than the average investor. But if you are someone that has the time to log in at market open or log on at 8 a.m. Eastern Standard Time and, follow a basic simple strategy, whether it's support and resistance or whatever it may be, which we'll dive into later, you can be a day trader making some good money and some good percentages, right? This is for people who have, like, let's say 3 hours or so. Let's call it from 7:30 to like 10:30 in the morning. That's usually the time that day traders are looking at the charts, waiting for setups to happen. But then if that's something you still don't have, if you don't have that type of time, and on top of that, you're looking to make some serious gains and do things correctly, this is where trading like the institutions will come into play. For example, I trade like the banks do, and I'm only trading for about 30 minutes a day at most, right? So sometimes I even trade for 5 minutes. I get my moves and I'm done, right? This is for people who are smart, to kind of put it in a more easier way, right? I mean, day trading, you can still make some money, right? But the thing is, you're going to be in front of a screen for about 3, hours or so. Whereas trading like the banks do, you're in and you're out and you're done, you go live your life, right? So those are the 4 different ways that you can potentially trade. And that's what trading is. And that's how you actually trade. So now you're probably wondering, well, Nestor, I figured out I'm going to be a day trader or I'm going to be a swing trader. What do I trade? What do I trade next? Well, let's break that down pretty simple for you, right? So there's a lot of different markets that you can trade. You can trade stocks, right? Then you can trade forex. You can trade cryptos. And then you can obviously trade indices. I'm just going to do IND and then metals, MET, right? So what does this mean? Stock market is everything in the US, like Apple, Best Buy, Disney, and et cetera, right? Forex are currencies, right? So that's like Euro, USD, USD, JPY, USD CAD, etc., which I'll explain a little bit more in detail. Cryptos, if you don't know what crypto is, you've probably been living under a rock, but that's like, Bitcoin, Ethereum, and then Solana, and then, everyone's favorite XRP, right? And then indexes and metals, that's pretty easy. That's like US 30, NAS 100, and then gold, and then the S&P 500. I'm just going to put 500 there, right? So let me kind of break down each one. Stocks. This is what people do, a lot of them, stocks and options, right? The reason why I personally don't like it is because there's not enough volume in there. And on top of that, I personally think this is more gambling than it is actually strategic trading. Because let's put it this way. If the CEO of Apple decides to have an affair with one of his subordinates, what do you think is going to happen to Apple? Because the dude couldn't keep it in his pants, he just crashed the Apple stock and just lost you a lot of money, right? So for me personally, you're depending on a lot of things and a lot of variables when it comes to trading these individual stocks. Can you trade these? Yes, do it. I mean, if you're seeing Apple about to release something new and you feel like it's going to increase the price of Apple, yeah, buy some shares and trade it and then let go of it and move on, right? But me personally, I don't trade stocks because it's just too many variables that go into place with trading stocks, right? I trade I'll tell you right now what I trade. I trade forex and I trade indices and metals. Why do I trade forex? Because you're looking at one currency against the next currency, right? So the euro against the dollar, or the dollar against the Canadian dollar, right? So you're basically hedging against inflation. And if you believe the dollar is going to be shorted, you can short the dollar and long the dollar. And on top of that, let's say if, the president of the United States does some crazy stuff or does some really good things, whatever it may be, you can decide to trade the dollar or just trade against the dollar. So you can make money on the way up and money on the way down. This is going to tie a lot to geopolitical things that are going on in the world, not just the US economy. So if there's war going on, that's going to affect the overall foreign exchange market in different ways, depending on the country that you're trading, right? And this also gives you a lot of momentum and volume, because the forex market moves $7.5 trillion per day. That's more than the stock market, crypto market, and index market and metals combined, right? Because you're trading currencies, you're trading with countries, right? So personally, I like this a lot. And it's, open 24/5, meaning it closes on the weekends. So it's always open because you can trade different sessions. Here in the forex, you can trade Asian session, you can trade London session, and you can trade New York session, right? These are different sessions that you can trade at different times depending on your schedule, right? So I like forex a lot, and it's a lot easier to understand. It's a lot more friendly to rule-based trading, which is what I do, rule-based trading, right? Cryptos. I personally would not trade crypto. I would just invest long-term, buy some Bitcoin, buy some ETH, buy some SOL, buy some XRP. Again, not financial advice. I'm just telling you exactly how I would do things. The reason why I wouldn't trade cryptos is because it's still relatively new. There's not enough data backing to figure out and read the different charts. And the majority of you people are not going to trade the main pairs. You're going to trade meme coins, right? And that's based on community and different things. But personally, I would just invest into cryptos long-term as a long-term position holding instead of trying to trade it. Just my 2 cents, not financial advice, so I'm not going to talk about trading cryptos. But then indexes, US 30, NAS 100 gold, and S&P 500. I trade this. I trade this every single day. So I trade forex and I trade indexes. Why? Because US 30, NAS 100 is the overall reflection of the US economy's health, meaning it's the top 100 tech companies and the top 30 companies in the United States of America, as well as the top Fortune 500 companies in the United States of America. I trade gold because when uncertainty rises, people, institutions as well, put their money into gold to hedge against inflation. So that's why I trade these, because it has a high volume. At market open, you're able to make your money in and out and you're done, right? So if you're trying to figure out which one you should trade, personally speaking, if you're a very novice person, I would go with forex. Very easy to read candles, not so volatile, has good momentum, good growth. Many people will say it's too manipulated, etc., etc. In reality, they're just blaming the markets for their incompetencies, right? Meaning they're not good at trading. Because I learned how to trade on forex, and because I learned how to trade on forex, I can trade anything in the world because this is so easy to trade on. For me personally, if you disagree with me, comment below and let's talk about it, right? And then once you start, figuring out how to do it in the forex section, you can then move to US 30, NAS 100 and gold and start doing those different types of ways of trading, right? Now, there's a second part to this, different ways of trading and how to trade. So we just talked about what to trade. Now we're going to talk about different ways of how to trade. So there's different ways of doing things. There's scalping, right, which we'll talk about here. There's, swing trading, which we've already spoken about briefly, right? And then there's just ordinary day trading, which we'll talk about here in a second, right? So what's scalping? Scalping means you're in and you're out of the market, like 5, 10, 15 minutes at most. Like you're in and you're out, right? You're catching a couple pips or points, right? And then you're just getting in and you're getting out, and that's kind of all it really is, right? So you're not trading for long. You're probably trading for 30 minutes a day maximum, and you're looking for 1 to 2s or 1 to 3s on the 15-minute time frame, right? Something super easy to get in and get out, right? Swing trading, you're looking at the daily or the weekly time frame, and you're looking to swing from the high, right? So you maybe start from here and you go here, or you go from the high to the low, right? Here to here, right? So you're basically holding it for maybe a couple days or maybe even a week. And you're probably targeting the same amount, 1 to 4, but your risk percentage is a lot less. Whereas scalping, maybe you can increase the risk percentage slightly to make a little bit more, but it's a lot more volatile, high impact movements, right? Day trading is something a little bit different, right? So day trading, you're looking at overall market structure and you're trying to find your entry points. And as you're finding your entry points, you are then taking positions and you're potentially holding your position for maybe the day or even a couple hours and letting it take profit, right? So this could turn into a potentially long-term trading situation where you're on the charts for 4 hours, right? That's what day trading is more about. So figuring out which one is going to be more suited for you and your schedule. Me, I'm always going to go with scalping. I've made the most here. It's been the less stressful for me, and it helped me keep easier on my rules, right? Meaning I'm able to follow my rules a lot easier. So personally speaking, I think scalping is the way to go. But again, depending on your current situation, you need to figure out if swing trading or day trading is going to be the best for you, right? Now you're probably wondering, all right, I understand what trading is. I know what to trade. I know how I'm going to trade, right? The different type of concept I'm going to do. Well, I'm not sure how much money can I actually make? What should I start with? What tools do I need? Well, let's dive into that right now. So the amount of money you need to start with trading is actually a lot less than you think. And this is something that I actually love about trading. You can start as little as $100 or even $500, right? You can start with this amount of money. Why? Because some brokers let you do that. So instead of giving a prop firm challenge $100 or even $500, you deposit that into your own account and start growing it slowly, right? So if you, let's do some easy numbers, right? Let's say you start with $500 in your trading account, right? And you're able to grow that to $1,000. What is the percentage of return that you just made on that? That's 100%. And guess what else you just proved to yourself? You can do 100% growth. So if you can do 100% growth on a $500 account, what makes it any different for you to do 100% growth on a $10,000 account? There's no difference. It's the same thing because you're following the same plan that you did, right? Now, when do you actually start pulling money out and living on it, right? If you're a part of the FinTrade Master Academy family, you've probably been following me and you know that I teach people to make 20% returns per month. So the idea concept would be to do this, is take that $500 or even take that $1,000 and grow it into $25,000. Because if you can grow that $25,000, bring that $500 and $1,000 into $25,000 and you're making 20% returns per month, guess how much that is? That's $5,000 you're making per month from trading alone. Let me ask you this. If you were to start making $5,000 with the click of a button, 30 minutes a day or however long it is that you're trading, how would that positively impact you? It'd probably make a good difference, right? You'd probably be paying some car bills, some phone bills, reducing debt, whatever it is, right? So once you hit that 25K benchmark, you can now start to look to make $5,000 a month. But that just doesn't mean you start instantly, taking money and putting it, into your bank account and doing things of that nature, right? No, you're not going to start doing that. What you're going to first do is you're going to bankroll 3 months of savings, right? So what does that mean? You're going to take that 5K, right? And then you're going to let it bankroll for 3 months in your trading account, which essentially bring you to $35,000, right? In your trading account. Now, this gives you buffer to take $5,000 from the market every single month, right? And that would leave you about, on average, I think about $2,000 extra to put into your trading account so it can compound and grow. And that's kind of how that formula would look on what you would need to start and the potential you can make, right? But as a beginner, I want to put here in the corner that what is going to happen is you're going to go through a cycle of frustration, a cycle of sadness, a cycle of excitement. You're going to go through all these different emotions as you're growing your account. So to make sure that you are protecting your live capital, what we're going to do is we're going to go on a demo account. And up until you can properly grow and scale a demo account, that's when you're going to start to go live. So start demo, then go live. And you can go little as $100 to $500 to start with, right? And that's how much money you need to start. And that's the potential that you can make with this amount of money. Now, of course, the potential is unlimited. You can grow this $25,000, $35,000 into 100,000, 200,000, 300,000, and so on and so on and so on. You can do all that. And of course, there's a growth plan to this. I'm not going to give you all the sauce, right? If you want to learn all the sauce, click the link below and apply, and then I can teach you all the sauce. But this is kind of the concept of what you could start with and the potential that you could make with $100 or $500, right? But first, so you're going to want to start on demo 100%, right? So now that you've figured that out, what tools are you going to need, right? This is actually pretty easy. The tools that you're going to need are a couple things. One, you're going to need a computer, right? Let me emphasize this. Your phone, you do not trade on. Do not trade on your phone. You trade on your computer, which I probably spelt wrong. As you can clearly tell, spelling is not my strong suit. Trading is, right? So computer is what you actually need to trade on. Following that, you're going to need a broker, right? You're going to need a broker, a good, liable broker, so that way you can actually deposit your money and withdraw your money and grow your money. And you're going to need a trading platform, right? A trading platform can be anything like Trade Locker. It could be trading view, or it could be, depending on, what broker you have, it could be MT4 or MT5, right? MetaTrader 4, MetaTrader 5. Those are the different trading platforms you're going to need, right? So those are all the tools, and a journal. You're going to need a journal. I almost forgot that. Because you're going to want to journal all your trades. In your journaling trade, you're going to talk about exactly what you traded, why you traded, and then put notes on behind it. So you can, have data tracking everything you're doing, right? So these are the tools you're going to need: is a computer, a broker, trading platform, and a journal, right? You do not trade on your phone. You can take and place a trade on your phone if you're traveling and doing a bunch of different things, but you do not chart on your phone whatsoever. Okay? Don't ever do that. You will lose so much money, right? So these are the different tools that you'll need. Now, I want to explain something that you're probably not going to be able to find just Googling things, right? You're not going to probably be able to find this 100% certain. You're probably going to run into a lot of different things, but this is the last thing you're going to need. You are going to need a strategy. I'm just going to put strat, right? You're going to need education, and you're going to need a mentor. I spent $20,000 learning how to do this. Why do you feel like a couple YouTube videos is going to make you successful all of a sudden? It's not. You're going to need a solid strategy, solid education, and a solid mentorship, right? That's what you're going to need to be successful in trading. Otherwise, you are going to lose a lot of money, and you're going to be unhappy, and you're going to cry a lot because you just went broke, right? So to avoid this, get these, right? Pretty simple. Now, what type of strategies are there? There's a lot. There's supply and demand, right? There's support and resistance. There's order flow. There's smart money concepts. There's what's it called? Institutional trading. There's breakouts. There's so many ways of trading. There's so many different strategies. You need to pick one of these and stick with it and perfect it and master it. A good, healthy winning percentage is 60 to 70% of a winning percentage. That is a healthy winning percentage, aiming for 1 to 2s. What does that mean? The 1 is what you're risking, the 2 is what you're gaining. So if you're risking 1%, you're looking to make 2%. If you're risking 2%, you're looking to make 4%. This is called risk to reward ratio. RR multiple is what we like to call it in the trading community, right? So you're going to want to aim for 1 to 2s and have a 60 to 7% winning ratio, and that's going to allow you to become profitable. But you need to figure out a strategy that's going to work for you. This is going to take some time. There's a lot of strategies out there. There's a lot, right? There's a lot of strategies. So if you're going to be that person that's just going to continuously go through a lot of YouTube videos, really go through all of them and really figure out which one's going to be best suited for you, right? But if you're somebody that's like, I don't want to go through bajillion YouTube videos, I want to get true education, then yeah, you're going to need a true education and a true mentor to help and guide you through this whole entire process here, right? Because right now you are confused as heck. You're like, what is all this stuff? This sounds amazing, sounds great, but like I need help and guidance. And that's where we come into play, right? That's where FinTrade Master Academy can actually take you from beginner to becoming a profitable trader. I have a lot of students in my community that had never traded a day in their life, and now they're trading on a live account, making 20% returns per month. Why? Because they followed one strategy, got the right education, and got the right mentorship. Now, I'm not saying you need to come with me. What I am saying is if you really want to be successful in 2026, you need to have these 3 things in order. Find a strategy, find a good educational system, and find a good mentor that you trust and you've done your research on and you know that they're going to be good for you, right? And that's something you won't be able to just magically Google and, do through YouTube search. That's going to be you going through a lot of different calls and interviewing different people for you to be mentored by, right? So that is how everything works. And this is how you can start becoming a profitable day trader as a beginner in 2026. If you find this valuable, drop me a follow, drop me a like, subscribe to the YouTube channel, put some comments below with any questions you have or anything that maybe if you're an advanced trader and then maybe you don't agree with some of the concepts I said, put it below as well. I'm always open for a conversation to prove people wrong because I know I'm right. And if you are looking for that strategy, true education, and mentorship, and you want to see if we're going to be a good fit, just click the link in the description and let's see if we can help you out, right? Other than that, I'll see you in the next video. Thanks for watching. Peace.